You're watching Business Incorporated live on Channels Television. Coming up, World Bank forecasts the Nigerian economy is set to grow by 2.8% in 2023, down from 3.3% in 2022. And the Kenyan government delays payment of March salaries for civil servants, cites financial challenges. And gold prices firm today as the dollar weakens and investors await U.S. March inflation data. Hello and welcome to the program. Let's take a look at how your money is performing at intraday, starting with the African continent. We see sentiment there now is negative on the African continent there. We see the NGX continuing that downward move there, 51,947 points. Hopefully 51K level holds for the all-share index. Was marginal decline was seen at intraday, down 0.01%. And we see Egypt and North Africa there down 1.28% at intraday. And we see Kenya there closing negative 0.57%. Moving on to the Middle East now, we see it's more positive sentiment we're seeing on the flip side in the Middle East. There we see in the UAE it's positive, 0.40% for the Abu Dhabi index. Dubai index is the big mover there, 1.52% up. And if we look at Saudi Arabia, 0.71% up, but we see Qatar there, 10,225 points, lone loser at intraday in the Middle East. Let's take a look at what's happening in Europe now. We see inflation has been a major problem for large parts of the globe in the past years, including Germany. Let's hear more now from Lars Holter right there in Berlin. Great to have you, Lars. So German inflation has been quite high, but apparently it's hard to say how high exactly. How's that?
Yes, thanks for having me. Indeed, it's hard to say because the government has recently changed the way it calculates inflation. Now, statisticians use a virtual basket of goods and services to calculate inflation. That basket is supposed to reflect what citizens are buying and paying for. So it includes everything from housing to energy use, food, but also medical costs. It includes clothes, restaurant visits, entertainment, movies, books, electronics. Really anything you are buying is supposed to be in there. Now, looking at that basket, German statisticians last year saw inflation climb into the double digits, over 10% for the first time in decades. It wasn't really a surprise, of course, after Russia began its war in Ukraine, because that had an immediate effect, especially on food and energy prices. But a few months later, looking at current inflation data, they all look pretty tame. And even more surprising, data from last fall is also much lower than we had remembered, standing at 9% and no longer in the double digits. And that has raised questions and accusations the government might have used bookkeeping tricks to get the numbers down.
So what's really behind this?
Well, the government has indeed changed the goods and services in that virtual basket, and it has arrived at a lower number. Now, this does sound very fishy. And if you don't like the outcome of the calculation, you change the method. That's pretty much what it looks like. But is that really okay? Probably not. But the Statistics Office actually does change the details of the basket every 5 years. And it does that to reflect changing habits in the population. It did that again recently, only this time the process was really, really hard. After all, we had just come out of a pandemic that had people change their spending habits quite a bit. People didn't dine out for a while, for example. There was no travel. So it's unclear and it's controversial how that should be taken into account. What's definitely strange, the new basket of goods and services weighs energy use much lower than it previously did, and that just as energy prices are up. This changes, of course, the bottom line figures. All said and done, the process wasn't very transparent, but it also wasn't anywhere close to fraud. It was really just statisticians doing their work.
And how important is this factor now in the current economic environment and markets?
Well, inflation remains a massive problem, and we've just heard it again from the IMF these past few days. Markets are mostly worried about inflation because of what they fear the central banks will do. They have been rising interest rates after many years of a zero or low interest policy, and higher interest rates, of course, cut into economic growth. And the IMF has also just said that they're expecting growth to be on the light side for years to come.
Thank you so much. That's Lars Holter right there in Berlin. All right, now let's take a look at what's happening in London. Now we have Juliana right there, and definitely Elon Musk back in the news again. Great to have you, Juliana. So Elon is saying that Twitter is roughly breaking even, at this time. Hope he's not regretting that purchase.
Good afternoon, Laddie. You're right. Elon Musk, the world's second wealthiest individual, is back in the news again. In fact, is he ever out of the news? He owns the news platform, doesn't he? Twitter, where we all run to. But just to give some background to this was a hastily conducted interview by a BBC journalist. And the news began yesterday because the BBC, which is, of course, a very popular broadcaster headquartered in the UK, they released a statement because overnight they saw that their official Twitter account had been branded a government-funded news organisation, which of course it isn't, even though it is publicly funded. It's publicly funded through the BBC TV licence. It's not paid for by the government. So they were really unhappy about that. They put out a statement. I think Elon Musk then tweeted that, he's happy to talk to somebody at the BBC. And then lo and behold, somebody started knocking at Twitter HQ, and Elon Musk opened the door. Not only did he open the door, the conversation was actually aired live via Twitter Spaces, and I think it broke a record. Over 3 million people tuned in. And so there was plenty of discussions, but the basis of the discussion was why that had happened, and Elon Musk apologised. He said that, he respects the BBC and he will make sure that the branding is removed. But of course, if you're speaking to Elon Musk, lots of other things are going to be discussed. So the comment that you were referring to about him saying that he's pretty much breaking even is contrary to reports that we've heard. Of course, he bought the Twitter platform in October last year. It was a controversial purchase. He tried to pull out. He couldn't. He got it for $44 billion. But because of the way Elon Musk tweets and thinks, we did see in the first couple of months that so many advertisers were pulling away from the brand. And now what he was saying is that they're kind of roughly breaking even, and that advertisers are coming back, and that the media were playing way too much into that of course, if you've got an election coming up or something coming up, you are going to push for advertising. But if it's not newsy, you're not going to. So he said it was really about the cycles and seasons for advertising, not about his controversial takeover, which is still controversial. I'm sure everyone noticed that for a few days, the Twitter sign, the icon, the logo was changed to a Dogecoin. People were not really sure about that. The W has been removed from the Twitter signage outside of their HQ. That then says Titter. What does that mean? And of course, we know that Elon Musk is constantly tweeting exactly what he thinks. But because he is the CEO, of course, he has incredible influence, and people are not really sure about that. In December, he did say, well, he tweeted, Laddie, he actually put out a poll, and he said he is going to stick to the response. And he said, do you want me to remain as CEO? The vast majority of people said no. He said he will abide by that. He was pushed by the BBC journalist on whether or not he'll be standing down, and he says he's not the CEO, it's his dog that's the CEO. So pretty much the typical thing you'd expect from Elon Musk. However, of course, we do know he is a genius, and his brain works in a very different way than most of us. But is his brain the kind of brain people want to keep control of Twitter? That is the issue. He does say that he is going to stand down, and I do urge you, if anyone hasn't listened to it, it is worth listening to his musings.
Yeah, I'm definitely going to listen to that for sure. But definitely, what's happening with Twitter, you definitely, impacts the labor market. And we see a survey of recruiters that's suggesting that overall supply of candidates for jobs in the UK have increased for the first time in more than 2 years.
Yeah, that's an interesting story, actually. Some data released by the Recruitment and Employment Confederation in conjunction with KPMG, just basically having a look at the labour market here in the UK, which is incredibly tight. It is a very good time to find a job in Britain if anybody's looking, because we have over 1 million vacancies. And the problem with that is that it makes everyone else's job difficult, because of course anybody who's working somewhere knows that at times if you're covering for 3 or 4 people, it can get quite tiring, which is the state of the British labour market at the moment. This is one of the reasons why we're seeing tens of thousands, in fact hundreds of thousands of people, stopping their work, marching on the streets, because they want better pay and they want better conditions. This is all contributing to the tight labour market. And one of the reasons why it's so difficult to get people back into jobs is because we had one of the highest death rates of COVID, not just in Europe, in the world. And not only did people die, lots of people are on long-term sick, so have never been able to return. That's a story that is still bubbling, that I'm sure we're going to be talking about later on in the year. That's contributing to the tight labour market. But alas, this data has revealed that candidacies are going up. So if somebody is putting out a vacancy, rather than just having 50 people respond to that advert, they're starting to see 100 people, which is good, which means that more people who are staying at home are considering going into the workforce. But of course, we know that this is still way short of what it was pre-pandemic, but it does start to show that perhaps there is some movement and people are starting to think, do you know what, I do want to get back at work, and I am going to try and apply for that top job.
Yeah, maybe a sign of things to come there. But how investors and markets reacting to the IMF growth forecast for the UK economy?
Yeah, pretty good. I was discussing the IMF forecast with Innie this morning. Not a great response from the British spreadsheets here. They're not happy, the broadsheets, shall I say, in the tabloids. They're wondering why the UN Finance Agency keeps downgrading Britain's economy. They've been wrong in the past. Are they going to be wrong again? Yes, according to the Prime Minister and the Chancellor, who are, of course, with Joe Biden as he visits Northern Ireland today. But that hasn't stopped investors, because the FTSE is very much in positive territory at intraday, led by gold mining companies who were leading the rises on the blue chip index. The FTSE All-Share is up by 0.5%. The FTSE 100 is up by 0.73%. And the FTSE 250, that's up by 0.1%. In the currencies market, the British pound is currently trading down against the US dollar by 0.12%. The pound is also down against the euro at intraday by 0.20%, and down again against the Japanese yen by 0.04%, Laddie.
Definitely, markets definitely will react to that. Thank you so much, Juliana. See you tomorrow.
See you tomorrow.
All right, let's take a look at what's happening in the U.S. That will see the S&P 500 futures rose slightly today as investors turned their focus to March highly anticipated inflation report coming in the U.S. There we see Dow Jones Industrial Average 0.24% up. Just the NASDAQ, tech-heavy NASDAQ there, 13,000 points. That's marginally down by 0.03%. But let's get a summary of yesterday's close from our correspondent, Maria Bird.
The U.S. stock market started off on a positive note this week. On Tuesday, the Dow Jones showed a slight increase at 0.3% up. The S&P 500 was flat, reversing from earlier day gains. The NASDAQ ended up at 0.4% up. It is clear that many investors are watching to see what will happen after the inflation report is released on Wednesday. Economists are also projecting that Friday's business reports could also show some major gains. This could be positive for the U.S. stock market, but it will also give good insight into the health of the U.S. economy.
I was a correspondent there giving us yesterday's close for the U.S. markets now. So after the break, we'll see what's happening in Kenya as the government delays the March salaries to civil servants. That's our next conversation. Do stay with us. Welcome back. So watching Business Incorporated live from Channel Television. To our next conversation now. In Kenya, we see President William Ruto's government says it's unable to pay civil servants their March salaries because of financial challenges. Let's talk to Wachira Kariuki now, Head Training and Research, Windsor Brokers, joining me from Nairobi. Great to have you on the show.
Thank you, sir. Well, most grateful to be here. Thank you for having me.
Yeah, so quite a breaking news there. So the Ruto government admitting not able to pay much salaries. How worried are Kenyans about this, and did it come as a surprise?
Yes, it did come as a surprise that the government, for the first time in history, has not been able to pay salaries on time. They are going to pay; they're just delayed. But he explained it categorically what the problem was. For the first time, we had our dollar going to an exchange rate of 145. So it required a lot more money to pay for the oil that we require into the country. We import a total value of $500 million per month worth of oil, which is 62 billion. And so this was a very large amount to get out of the system. And so he apologized for it, but he said he's taken measures, remedial measures to protect that and prevent that from happening again. And so it was a high price to pay, but a necessary one for the moment. And hopefully we'll get a bit more stabilization going forward and it will not be a repeat problem.
What do you think are the financial challenges the government is talking about here?
The government basically has a problem in two forms. One is that we are paying a very high amount in dollars to acquire the oil. And number two, we're having a lot of something called redemption. The government has issued bonds. And last month we had 100 billion worth of bonds being redeemed, meaning the government had to pay $1.1 billion out for government bonds that they had issued out. So those two problems coming together at the same time created a shortfall in the cash flows for the country. But I'm happy to say he has come up with ways and means to prevent that from happening again. And we think this is not going to be a repeat problem. But those are the two main problems that led to that shortfall in cash for the civil servants to not get their salaries last month. Sir.
Yeah, and definitely the government, is trying to pay off some of its debts, at this time. But do you think
Correct.
this is a good move, delaying salaries?
Well, obviously, it's touching on the citizens, considering we came from an election year last year. The president has not even finished 1 year in his position, and then suddenly he's not able to pay the civil servants. It's unprecedented and wrong. But like he says, Kenyans have given him the breathing space to be able to restructure the economy, do a few things here and there, protect ourselves. And some of those measures are coming with a high impact unexpected. But since he has committed to not having this problem again, and by the way, one of the things he said is that for the first time, Kenya has been able to import oil using Kenyan shillings. Right? That is unprecedented and has never been done before. And so EPRA, the Energy Regulatory Authority in Kenya, has gotten around to negotiate for the first time import of oil to be denominated in Kenyan shillings, which means we're not looking for 500 billion worth of dollars. All right, we're just looking at $500 million. Sorry, we're just looking for 62 billion, which is available in cash. It is the exchange rate that was a problem. It is finding the dollars. And on top of that, the banks had been hoarding the dollars for quite a bit. So on top of all those political measures and economic measures, he also had the Central Bank of Kenya sit down with all the 46 commercial banks and tell them to not play around with the dollar, to stop holding the dollars, and to stop any speculative move that would accelerate the depreciation of the shilling. Those three moves together have led to a strengthening of the shilling, number one. Number two, renegotiating for the dollars for us to be able to buy our oil in Kenyan shillings for the first time in our entire history, 55 years old as a country, we've never done that. That is unprecedented. That's a very good move. And also making sure they clamp down on banks who are holding dollars and trying to speculate on that so they can report profitable gains on their books, especially as we head into the half-year results, which is in June. So a lot of banks were playing with that to look good. And so the politicians, the president came through the central bank and has aligned that. Therefore, we have streamlined our systems and we've seen a drop in the exchange rate from 145 shillings to the dollar to 130 in less than 2 weeks. That is also a very large drop in 2 weeks, which means the measures the president has enacted vis-a-vis through the central bank and also through his political allies and even through renegotiation of the import of crude oil is working well to augur, to protect the shilling and also make sure that we have enough money going forward to pay the civil servants and of course do other economic aspects, micro and macro, to support the economy and ensure we never go into that problem again and also we do better going forward. That's what we are excited and happy as Kenyans, that it was not just a lack of money, it was a restructuring of the financial programs for Kenya, both in the industrialization aspect, import-export, and also in the banking sector, something which had never been done before. Banks continue to play around with this dollar issue, but finally we seem to have found a stable ground. And so central bank issued a very strong economic report and a new mandate on how to interact among themselves and how to put clear control measures on the dollar. So I think going forward is going to be a fantastic thing, and we expect that thing to drop down to maybe 125 in the coming weeks.
All right, we'll be watching out for that for sure. But looking at the debt level now, do you think the government will be able to manage, existing debt without taking on more debt?
Not really. I honestly think, the president has come out clearly and said he does not want to pay recurrent expenditure using debt, which is a brilliant idea. That might mean compromising on infrastructure. That might mean compromising on progress and creating stability in the country for the first 2 years. If he chooses not to have any major projects ongoing which require a lot of money required for that and just stabilize that money, then he can do that, right? He has taken fantastic measures here and there. He's controlling some aspects which are very dollar denominated and foreign currency related. If he does that, because for as long as currencies are fluctuating and the value of how much you owe keeps on changing month to month, then it's a problem. Yes, he's restructuring the debt very well, and he's restructuring the debt. There's debt like bonds, and there's debt in terms of recurrent expenditure for the things that you require, right? Oil is one of them. We perpetually rely on oil from foreign companies. We have a lot of import regarding agricultural products. If we can start paying for some of those things in shillings as opposed to dollars, then he has clamped down on the banks to make sure that they make the dollars available and they're not speculating on it, as I said before. Then we can, and he's not also very aggressive on the infrastructure, which the former president did. He doesn't need to once again go back and go down that path. If he can give himself 2 years, which he has said clearly he's going to give the breathing space to the bonds, and we are not necessarily going to borrow as heavily, number one, and number two, we're not going to borrow in dollars. We don't plan to float another sovereign bond, which was in dollar denominated. We're going to be fine, all things considered.
Okay.
Sir.
Well, we'll definitely keep watching out, and we wish the president good luck there. Thank you so much, Wachira Kariuki, Head Trading and Research, Windsor Brokers. Thank you.
Thank you, sir. Thank you for your time.
All right, moving on to South Africa now. See, the South African Revenue Service has announced that the organization has lost an estimated 60 billion rand in revenue due to power cuts in the country. Load shedding or power cuts in the country currently stand at stage 5, which means longer stretches of power outages, which have been causing immense harm to the economy. The SARS Commissioner, Edward Kiftuata, shared this information during a briefing on the Revenue Service's annual performance. Take a listen.
Because of the season we are in, I'd like to just share with you some of the observations of load shedding. Understandably, load shedding, but also affects our revenue collection daily due to loss of sales and profits. VAT is the tax that would immediately respond to load shedding as sales come under pressure. Company taxes are also impacted by load shedding. The data from the CSIR indicate that through load shedding, we have lost 3,773 hours of production in the calendar year 2022, and it is the highest loss in the last 5 years. It also says that the energy that we have shed amounts to 11,529 gigawatt hours, and considering the demand-side response, the energy shed that reduces to 8,301 gigawatt hours. Together, these factors suggest that the loss to the tax system is estimated at 60 billion. We are obviously refining our understanding of the full impact and the timing, as some of these may only manifest over a period. For example, value-added tax in some instances are delayed. Corporate income tax may spill over more than one financial year. SARS expect that the impact of load shedding will reflect in corporate income taxes collections, particularly during the first half of the current financial year. There's a positive side to this, and I want to talk about renewable energy. Load shedding naturally presents a huge risk to the fiscus, but we've also noted the emergence of renewables as a new subsector. In the Western Cape, for instance, we have noted a number of wind energy-linked entities that have moved from being in a refund position over the past 25 years and are now paying VAT because they are actually producing electricity and...
And from the World Bank now, the Nigerian economy is set to grow by 2.8% in 2023. That's down from 3.3% in 2022. In its Africa Pulse report, April 2023 edition, titled Leveraging Resource Wealth During the Low Carbon Transition, that economic growth is expected to accelerate slightly to an average rate of 3% in 2024 and 2025. And that's it on Business Incorporated. Thank you so much for watching. I'm Ladi Williams. Bye for now.